Hi everyone, let's go through my preferred and alternative scenarios, including potential trading setups, starting with the bullish scenario on the macro time frame, where this is a 1, 2, 3, 4, and now looking for a wave 5 to the upside with prices of at least 98k all the way to 174k. In this scenario, wave 4 bounced perfectly at the 0.5 fib, taken from the low of 2 to the high of 3, which is an important target for a wave 4. It also bounced the exact week on the 0.618 fib time, taken from the low of 2 to the high of 3, and we also had a volume peak at the lows. Now, a volume peak is important as it can signal potential reversal areas like it could do over here with this wave 4, but as it already did with this wave 2 in the past over here. As you can see, this is then a wave 1, 2, and we have this massive volume spike in the wave 2 compared to the spikes in wave 1, which then led to the big impulsive move in a wave 3 to the upside. If we then look at the targets for a wave 5, you can see a yellow box and a white box. The yellow box for me is a more rare target area, but just basically between the all-time high and 98k. And then for me, the most likely target area up here is between 98k and 174k. If we then go to the bearish scenario on the macro time frame, I'm looking for the following. In this scenario, this is a 1, 2, 3, 4, 5, and we're now in a corrective structure that is not yet finished. In this scenario, what I don't necessarily like too much is that this wave 4 is very, very short compared to this wave 2. Usually a wave 4 is longer in time compared to a wave 2, but that is not the case in this scenario, which is a little bit odd. Then if we look at the corrective structure, we have a 3-wave structure over here in the W, followed by a 3-wave in X, and we would expect another 3-wave structure down in Y. In this scenario, the minimum target for wave X is the 0.382 Fibonacci, taken from the all-time high to the low of W, sitting at about 29.6k. It also has nice confluence with this support resistance area that we haven't backtested for a very long time, as you can see. So a potential trading setup over here could be very interesting. In this scenario, potential trades, shorts can be laddered inside of this area, stop loss above, trading it to the downside, where eventually we have a couple of targets for the wave Y. The most common ones, let's say, are these, but these are very low, between like 7.5 and 5.4k. The first target, which is also common, is the 0.618, sitting at about 12.6k as it stands at the moment, which would also be a nice backtest of this area over here. So this can be quite still a very interesting bearish scenario on the macro time frame. If we then go to the high time frame, I have 4 scenarios to show you, 2 alternative, or actually 3 alternative and 1 preferred, where in this scenario we have the lows already made. We're now in a bullish structure over here with a 1, 2, 3, 4, 5 to the upside. We have this as a wave 1 in yellow, and this then is an ABC in wave 2, which is then an expanded flat in wave 2. However, there is a couple of things with this count that I don't like. The first one is that if this is a wave B, the most common target for wave B in an expanded flat is the 1.236 and the 1.38, pulled from the high of 1 to the low. And you can see that we have multiple daily candles closing above this level. That is not what you like to see. Usually the 1.38 is also the maximum level in a wave B. And you can have a wick above this level and then close inside this 3.8, or maybe yes, you could wick above, close just above, but then go to the downside. But instead we now closed almost a full week of candles above this level as well. Like there's 5 candles here closing above the 1.38, which is not what you like to see. The second thing is that if this is indeed an ABC zigzag, then this B wave over here, and if I go to maybe a lower time frame, you can see it. If this is a 5-wave move in wave A, B, C for a 3-wave structure in wave B, this wave B in the zigzag just missed out on hitting the, as you can see, 0.382, which is a minimum target for a wave B. And on top of that, if this is then an A, B, and this is wave C, which is then by itself a 5-wave structure, it only hit the rare target for a wave C and not the most common target for a wave C, which sits at 32.5k. So those things combined together make me think that this is definitely an alternative scenario and surely not preferred. If we then go to another alternative scenario, in this scenario we have again the high of 1 is basically the same high, but now wave 2 is already in and we are looking for more upside for wave 3 with minimum prices of 43.3k, as a wave 3 has the minimum target of a 1.618 trend-based sub-extension from the low to the high of 1 to the low of wave 2. However, it can be extended massively, as you can also see with the fibs on your chart, all the way to over 100k easy. Now, if you look at this scenario, my main problem is time. Wave 2 over here is very, very short compared to this wave 1, which you can see by eye as well. And usually, or I should say almost always, wave 2 reaches at least the 0.382 fib time, which basically was the 21st of March. However, the low of wave 2 over here in this scenario was made at the 10th of March. So that is a very big difference between usually the minimum target for wave 2 and what it has actually done. It is closer to the 0.236 fib time from the low of 1 to the high of 1 to then from the low of 1 to the high of 1 and then double click over here with fib time. You can see it's very close to the 0.236 and not close at all to the 0.382. And that is just something I do not like to see. If you then look at the bullish scenario on the higher time frame, this is one of the two preferred scenarios. So I had two alternatives, two preferred scenarios, one bullish and one bearish preferred. This is the bullish preferred scenario, where in this scenario we have a WXYXZ and then a bigger wave 4 on the macro time frame. So this is then the low of the bear market and we're now looking for upside. In this scenario, wave 1 is about to finish. Over here might be finished or is about to finish. We're very close at least to then the end of this wave 1. Some nice support resistance over here as mentioned before. And with this wave 1 we would then be looking for potential downside in a wave 2. Now if we look at the targets then for a wave 2, the most common targets are the 0.5 to the 0.786 fibs, which is basically from 21.1k to 17.6k, but by far out of these most common targets, by far the most common one again is the golden pocket, which starts at about 19.6k and also has a nice confluence with this low over here for maybe a nice liquidity grab, grabbing these lows, the stop losses and all that stuff, and then trading it to the upside for then a potential long setup, laddering the longs inside of this area, stop loss below the invalidation, which is in this case wave Z over here, which is definitely the invalidation for this bullish scenario, and then trading it to the upside with targets as mentioned of maybe 100k, 174k. Now if you look at the volume of this impulse so far, it looks very nicely as well, for this being a 1, 2, 3, 4 and this being a 5. Over here we have the most volume in a wave 3, you can see the peaks. Then we had a bit of a dip because this is then a corrective structure, and then over here this move to the upside increases in volume again, but so far it is lower than this wave 3, and that is what you want to see in then a potential 1, 2, 3, 4 and then wave 5. If we go to the bearish scenario on the high time frame, then from the all-time high we have this WXY structure as mentioned on the macro, but then inside this X we're looking for an A, B, C expanded flat. And inside this wave C we are now working on this wave 5 and almost finished or finished. That of course is the question. Now the wave 5 most common target area is between the 1.236 and the 1.618 taken from the high of 3 to the low of 4. We're currently ranging inside this area for a couple of days already. And also important, we did so while also touching the most common wave C target, which is this white box between 27.7k and basically 34k. However, is this then it and can we move to the downside? Well, I would like at least a little spike to the upside because this 1.618, which is still a target for a wave 5, has confluence with the 0.382. These levels are exactly at the same price level, which is 29.627k. And this 382 over here is usually a minimum target in a wave X and then a WXY. Now, what you can also see is that I put the invalidation all the way up here at 34k, even though we still have a rare wave C target up here. And the reason I did so is that if price is going to push now all the way up to this invalidation level as I have it here, then this is probably not going to be a wave 5, because this wave 3 is already extended. So having another extended wave 5 is extremely rare and actually doesn't happen. Usually if 3 is extended, it is the only extended wave in an impulsive structure, and you would think that wave 5 is ending in well, basically the wave 5 target areas, and one of those target areas calculated here is the Fibonacci from high of 3 to the low of 4. So the high in this scenario should be in relatively soon. If we then go to the medium time frame scenarios, I have two scenarios to share with you. The first one is the very bullish scenario, and then the bullish/bearish scenario. So the very bullish scenario is that wave 1 is in, wave 2 is in as well. As mentioned, it's not preferred, but in this scenario that is the case because it's still an alternative, right? And then we're looking for a wave 3 in yellow to the upside. Now in this scenario, we then have a 1-2-1-2-1-2 scenario, as this is the low of wave 2 in yellow. Then we have a 1-2 in green, and we're looking for another 1-2 in blue for then a very massive, incredible wave 3 to the upside, and where the moon is basically the next target, right? But there's a couple of things that we have to look at. So first of all, this wave 2 missed out on hitting the 382, and you can see it slightly, maybe if you even zoom in, but we missed out on hitting the 382, which usually is a minimum target for a wave 2. So that's not something that I like to see. And then if we look here at this, what we got so far, this structure over here, we can see that, and I actually go to the 1 hour, we can see that this wave 2 could in theory be finished over here with the lows that we already made, with this then being a 1-2, and now we're looking for a big push to the upside. However, the 382 is again a rare target. It is, however, touched after the 0.5 fib, which is absolutely fine for wave 2, but it hit the 382, which is a rare target, and I would like to see price dip deeper. Of course, because those are more common targets. But in a very bullish environment, yeah, okay, the 382 can be possible. But then we would expect now an impulsive move to the upside. And as you can see, this so far is not looking very impulsive. It's quite difficult counting 5 waves in this structure. It looks very 3-wavy. And now we're already grinding to the downside for a while. So I would prefer making then another low somewhere later in time and then go to the upside. But now wave 2 is getting to the long side. Instead of being too short with the 0.382, we're now getting very long behind the 1-to-1. So if this is wave 1 and this is then wave 2, the 1-to-1 of this in time of this wave 1 taken from the low of 2 to the high of wave 1, double click with your fib time tool over here. So it's this one, trend based fib time. Toggle on the 1-to-1. And this is often like wave 2 often is a little bit shorter, or maybe around the 1-to-1, right? Between like the 0.382 and the 1. Having a wave 2 going all the way or getting close to the 1.618 is also quite rare. So then we have to think of other structures. But hey, in this scenario, nonetheless, the potential trading setup would be to enter in this area with the either already entered at the 382 or entering at the most common fibs over here, which is basically between 26.2k and 24.9k for then a potential long setup. Very, very clear and easy invalidation, which is the low over here. So if price is going to drop and hit this level, invalidation is hit, you're out of this setup. And if we then go to the more preferred scenario, which is the bullish/bearish scenario, and I called it like that because it actually doesn't matter. It's the exact same trade. It's the exact same thing that is happening on the chart, because over here you can see wave X. We already spoke about the WXY scenario, and you also see the yellow wave 1 in a 1-2-3 scenario. The thing is, where price is at the moment in both of these scenarios, we are counting a 5-wave structure in this impulse, which also means that the target area for wave 5 is exactly the same in both of these scenarios, which are these fibs over here as shown before, the 1.236 all the way to the 1.618 sitting at 29.6k. We again also have the support resistance area over here, which is very nice. So the trading setup for this scenario is exactly the same, with then trades laddered inside this area, stop loss somewhere safely above, better be safe than sorry guys, and then trading it to the downside. Of course, everything here is educational, no advice. Trading setups are based on Elliott Wave knowledge for educational purposes. So if we then trade this potentially to the downside, the most common targets again are the 0.5 to the 0.786, with the confluence being at the golden pocket with the lows of these 4. Now, as mentioned before as well. Now, the only big difference between the wave 1 and the wave X is how long one can keep the short. With the wave 2, you're expecting the short to finish somewhere in this area, and then you would reverse into a long for then a big massive 3 to the upside. But with a wave Y, you're gonna hold it all the way to lower levels between basically like 13 and 9K. So it's much more of a swing trade compared to a potential wave 2, and it basically all depends on how price is gonna come down. And if we then go to the lower time frame scenarios, I have 4 scenarios to share with you. So the first one is, well, not necessarily a preferred one, but definitely still a possibility. That's why it's an alternative. In this scenario, we have the end of wave 5 already in on the lower time frame. So 1, 2, 3, 4, 5. So wave 5 ending basically ends the whole impulse. So this is the end, kinda. And then we now are in a corrective structure where this is a wave A. We then have a 3-wave B, and now looking for wave C. Now, something to note is that this wave B is very short compared to this 3-wave in A. Usually wave A and B have close to like a 0.618 1-to-1 relationship in time, but this wave B is even shorter than the 0.382, which by itself is very rare. And if this is an expanded flat scenario where wave B hit the 105, which is a rare target for a wave B expanded flat, with then this being an A, B being higher than the start of wave A, and then moving to the downside, you would expect the impulse to be fast and sweet. So usually the impulse is the shortest out of the 3 waves, but in this scenario it's already taken a while, and it's also not like you want to actually see it going down more and more faster, which is currently not the case. Now you can count 5 waves in here, also courtesy to John. You have then a 1, 2, 3, 4, and now you're looking for basically a wave 5 to the downside. Well, if we then look at the targets for wave C, the most common target area is 25.7 to 25.3K. These 2 12618s, that is the most common target area for wave C. Unfortunately, that is right above one of my target boxes, as my target box is from 24.9K to 24.4K, which is a much better support area. So if price comes this low, I would expect price to continue to the downside and at least hit this target box with some very interesting levels included. And also another thing is yeah, we do have rare targets for this wave C, the 1.236 and the 1.38. Also, by the way, pulled from the high over here to the low of A to the high of wave B. But then if we look at this being a 5-wave structure as mentioned, a 1, 2, 3, 4, and now looking for 5, the kind of maximum target for wave 5 as well is the 1.618 at 26.5K, which is even above the rare targets for wave C and nowhere close the more common targets for wave C. So yeah, this wave C is the biggest issue basically with this particular scenario, because is it an impulse or is it not? That's basically the question. Now what you can do, and this is an alternative in this alternative to make it more complex, is that remember, this is the high of wave 5, so keep that in mind. I keep the circle there. And what, oh no, wait, in this scenario that's not true. Let's forget about that. This is the high of wave 5. And then we have a little bit of an ending diagonal over here. So now this impulsive structure is a 1, 2, then some sort of like 1, 2, 3, 4, and then an ending diagonal 5. First of all, I don't like this ending diagonal. I actually used to have this scenario on my chart, but I don't like this ending diagonal because of this wave. It looks impulsive, while the others, you could make 3s out of those, like a 3. You could make a 3 here. This is then an impulsive structure, 3, 3. So this is a little bit weird to count it like this, but okay, let's imagine this is the end of 5, right? Very alternative. Then this can be a wave 1, very impulsive. Usually like this looks very much like a C, but this is then a wave 1. We then have a wave 2, which reached the 0.886 Fibonacci retracement level, which is a rare target for wave 2. So this is then 1, 2, and now you're looking for a bigger 3 to the downside, and then this target box will easily be reached. It's even like a target for an impulsive move to the downside. So the 886 rare target for wave 2, so we have a 1, 2, and now we're looking for a wave 1 in a bigger 3. So then you have a 1, 2, 3, 4, 5. Maybe I should put some stuff on the chart actually to make things a little bit, at least a little bit more clear. So this is wave 5. And then from there, we have a 1, 2, and we're looking for a lot more downside. Let me put this in blue. And then inside this wave 3, we then have another 1, 2, 3, 4, and then maybe 5 coming. And then this by itself is going to be a wave 1, and then we expect a 2, 3, 4, 5, and that is then even a lower degree count. So now what you're going to do is you're going to look for an impulsive structure to the downside, where this is going to be a wave 1, 2, and eventually 3, 4, 5, inside a 3, then another blue 4, and then another blue 5 to the downside. So now we're looking for this to be an impulsive structure, but it's part of a bigger structure, let's say, and it's all about how we are. If we come down, how do we come down? So let me remove the clutter from the chart. We don't like clutter on this channel. And let's go to the other lower time frame scenario, which is this one over here. So in this scenario, which is one of my 2 more preferred scenarios, wave 5 is in. We have a 3 wave A followed by a 3 wave over here, but that is then a W in a X in a Y. Now the X can be finished or can still be finished. The reason I actually got this X over here, and also now the invalidation for a while, is because if this wick is taken, or it has to be a very quick wick over here, but it's quite likely we're going to take these lows as well, because there's not much support here. Like there's barely any support. So if price would come down below this wick, I would expect for it to continue basically, which also has to do with my second preferred scenario. But let's say in this scenario, this is some sort of a 3-wave structure in X. We're then looking for a move to the upside in a wave Y. Currently, it doesn't really look that nice, to be honest. But then we're looking for a move up for this wave Y, and then an A, B, and then a very explosive C to the downside, an expanded flat. Most common target, the 1.236 and the 1.38, taken from 5 to A, which sits at about 29 to 29.3K. Very interesting area. Also, the target box over here has not yet been touched, which in general for me is an interesting area for a potential short setup here based on Elliott Waves educational. Then we go to the downside for a big wave C. The other scenario is this one over here, and this might be now my most preferred one, but then we have the end of wave 5 once again, looking for a 3 wave, but this now is a W X Y. So in this scenario, an X wave, it's perfectly fine for an X wave to be a lot shorter than a W. An X can be long, can be short. An X is much more, let's say, has a lot more time setups than the B. The B is usually like close to the 1-to-1 of an A-B, but in this scenario the X can be very much by itself. And in this case the X is very short. We have then a W, X, looking for a wave Y, which then is part of a bigger A. Now, the wave Y can be a complex structure, which is more of a channel in like a W, X, Y, X, Z type of move, or it can be a 3-wave structure. The most common target area for a wave Y is over here between the 1 and the 1.236, taken from the low of W, or from the high of 5 to the low of W to the high of X with the trend-based fib extension tool. You also have a double bottom over here, so it could be a nice liquidity grab for a move to the upside. And this potential trading setup is only valid for me. And I don't trade this. This is, by the way, Elliott Waves is not my entry setup. Elliott Waves is for my bias. My entry trade, basically my trading strategy is different. I have a different entry strategy and everything included with stop loss and stuff. So the only way this could be a potential trading setup, in my opinion, if this is going to be a swing trade or a swing failure pattern trade, where we take the lows, close above, and then move to the upside. Then you put the stop loss below the low that is made and trade it to the upside with then a potential wave B target and an expanded flat, because then this 3-wave move is going to be wave A. So we have a wave A followed by a wave B, expanded flat C. Therefore, we are again reaching this area, which has some interesting levels for then a potential short setup to the downside. I hope this video was helpful or valuable to you. It's a long one on the Sunday, but I hope you enjoyed. Thank you for watching and subscribing, and I will see you at my next video. Bye bye.